let's welcome to Rooftop South Korea webinar. This is Dari, project producer of Green Energy Future South Korea 2020. Rooftop South Korea is one of the Rooftop series of online live webinar by leader associates to bring you more business content and project information about the South Korean renewable energy market, especially during this COVID-19 outbreak, and to complement the physical gathering of Green Energy Future South Korea 2020 and assess your understanding of this shining market. Today, we will talk about the cutting-edge policy, interpretation, and project development trend of South Korean solar energy market. Here is a brief agenda of today's webinar. Our respectable speakers are Mr. Park, partner from Lico, Mr. Bars, lawyer also from Lico, and Mr. Evan, general manager from Vienna Energy, and Ms. Miho, head of Japan and Korea research from Bloomberg New Energy Finance. Ms. Miho will replace Ms. David Kong because of some urgent schedule happens. And every presenter's presentation will include the speech session and the Q&A session. So before we start, to help audience engage in the webinar and interact with our speakers better, I have a few items need to remind in advance. First of all, sound. During the presentation, the audience microphone will be muted to avoid having background noises. If you can hear me now, you are doing well with the audio. But if at any time during the presentation you have sound troubles, you can switch over to a telephone mode. As you can see at the bottom of your control panel, there is a chat box option. We have kept the dial-in number inside the column while the webinar and participant ID person by person. Please kindly check the email notification and call in with your own ID. Second of all, interactive Q&As. If you want to ask questions to our presenters, there is a Q&A box for your usage, and we will go through the questions at the end of each presentation. One important note is that please do not add further questions or comments once the Q&A session starts, as we hope to create a comfortable environment for presenters to address the pre-asked questions instead of being interrupted by pop-up messages. As there might not be enough time for presenters to answer all the questions, they will also type to answer your questions after they finish the speech. And last, recording sharing. Today's webinar recordings and acceptable sound confidential part will be shared with all of you by email within next week and will be posted on Green Energy Future South Korea website as well as social media channels. Okay, the last slide of my introduction is who we are and what we do. Leader Associates is an international clean energy event organizer and is one of the largest in Asia Pacific. We are going to host our offline Green Energy Future South Korea event in Seoul and would like to take the opportunity staying connected with all community peers. And now, that's all for the housekeeping items. Let's start with our first presentation of today, Mr. Park and Mr. Bars from Lianco. Mr. Park has advised on energy, infrastructure, and real estate development projects, whether domestic or outbound, including financing for each for the foregoing. And Mr. Bars is an Australian qualified lawyer with strong experience given via assisting with multiple energy projects in Australia and the Asia Pacific region. And so, Mr. Park and Mr. Bars, and could you please share your screen and start your presentation?
Yes, we are taking steps to share our slides.
Yeah, thank you. And Mr. Evan is currently the in-house counsel of Vena Energy South Korea, and he will center on the utility-scale solar projects and focus on the challenges and ways to overcome them more from a practical and the real experience. So, Mr. Evan, and could you please share your screen and begin your presentation? Hello, Mr. Evan.
Okay, hold on
Okay.
a sec.
Okay. Yes, no worries.
Okay, thank you. Can you hear me?
Yes.
Okay, great.
And can you put the slides to the full screen? Okay, yes, wonderful.
Thank you, Ms. Shao, for the introduction. Before I start, I'd like to give a brief introduction of who we are. Vena Energy is an IPP, the largest in the APEC region, and we operate in 9 countries with over 11 gigawatts of capacity in wind and solar. So this presentation on the challenges during utility scale solar development in South Korea will be composed of 3 parts. In the first part, I will be touching on the recent major government policy changes that I believe was touched upon covered also by the gentleman at the INCO. So my presentation on that part will be mostly focused on their implications from a developer's perspective. And in the second part, I will be discussing the different major challenges that the developers may actually face during solar project development. And in the third part, I'll be placing forward some ideas on how to cope with or overcome such challenges. So if we move to the next slide, the first item on the recent government policy changes would be the acquisition restrictions that Mr. Park just mentioned. So as you all know, due to the previous presentation, restrictions have been newly placed on the acquisition of solar plants before COD. And now it has become extremely difficult and cumbersome to acquire brownfield projects. That is projects in development or construction before COD. And given that it is extremely difficult actually for foreign developers to develop projects on their own, new strategic approaches may necessarily have to be devised. Also, the business license requirements have been tightened. As was mentioned in the previous presentation, community and environmental considerations have become a necessary factor in obtaining the business license. And although the government's current position seems to be that an outright consent and the clearance of community or environmental issues are not necessarily required at this stage, an explicit and evident opposition from the local communities or the local people, or an obvious environmental concern may prove to be detrimental in actually receiving the business permit, the business license. Thus, developers will need to carefully plan their community and EIA strategies beforehand. On the third item, the development permit process and the business license process for projects, for small scale solar projects, usually below 3 megawatts that go to the local government, have been consolidated. And this, we hope, we're expecting will expedite the overall development process for projects of this size. And as a result, we expect to see more developers rushing to these small scale solar projects. Also, as Mr. Park mentioned, detailed regulations on the installation and the operation and management of ESSs have been enacted, and we expect that this will result in more clarity around the ESS market in general. And finally, we, as a developer, we think this is the most important change. Although, as Mr. Park pointed out, this isn't formally or officially documented yet. We're told that the bilateral private REC purchase agreements with the public GENCOs, which are, of course, the subsidiaries of KEPCO, are no longer available for solar projects, although they're still available for wind projects. And all such solar projects are in the future mandatorily required to receive long-term fixed-rate REC purchase agreements through the public tender process. As you know, in the past, projects were able to obtain long-term fixed-rate REC purchase agreements through private negotiations with the GENCOs, if the GENCOs were invited as shareholders. Under the old regime, developers were able to gain certain clarity over the expected revenue during the development at, of course, an affordable price. Under the new regime, first of all, whether a long-term fixed-rate REC purchase agreement will be available, and the price still remains uncertain until the final stage of development, that is after the development permit is obtained. However, the one upside that we see from this change is that in the future, there will be no longer the need to involve these GENCOs as shareholders. And from a revenue perspective, that might be helpful and advantageous. So in short, we believe that, well, I believe that these government policy changes are directed to support and are directed to support the development of small-scale solar projects, whereas they're rather also designed to, in a way, hinder the development of utility-scale solar projects. If we move to the next slide and start with the actual challenges that the developers may actually face while developing a utility-scale solar development, is first of all, there is the risk of having to lease or purchase large amounts of land and paying at least the initial down payment, which is usually 10% of the entire land price at a very initial stage of development. And that would be before knowing the details of the development and the cost associated with that development, and of course, the revenue. As you can see in the development flowchart that's in the middle of the slide, the land aggregation or the land aggregation commencement is actually the first step of development in Korea, because this is required to obtain a business license, which is needed to get the grid connection and to conduct the EIA and obtain the development permit that you would need to actually enter into an REC purchase agreement with one of the GENCOs. And the price of land, the land, which actually does have good solar resource, which is usually located in the southern western part of Korea, is expensive, where the price of land needed to develop 1 megawatt, which is usually around 1 hectare, can range from would have a range of 240 million Korean won to 300 million Korean won, which would roughly be around 200K USD to 250 USK. So this would mean in order to develop a 10 megawatt project, you may have to invest at least 2 million USD to 2.5 million USD to actually begin the project development. In short, large amounts of investment large amounts of investment is needed to be made before the details of the investment become certain. The 10% initial down payment that I've been just mentioning is usually non-refundable, which means that the developer has to bear the loss of this money if the project ever becomes unfeasible during the development and the parties have to abort. Also, it's worth mentioning that certain types of land, such as agricultural land, can only be owned by certain types of entities, like farmers or agricultural associations. So, to summarize, there's a lot of risk actually associated with the aggregation of land, but this is a necessary first step that everybody has to go through in order to actually start the development process. And then the second challenge would be the risk of uncertainty around the project revenue, which would remain until the final stage of development. Because if we look at the development flow chart again, which is again in the middle of, which is depicted in the middle of the slide, the REC purchase agreement, which fixes the revenue for the project, comes at the last, almost the last stage of development before financial close and NTP. And in the past, when we had the bilateral private REC purchase agreements with the GENCOs, as Mr. Park pointed out, in the past, we could start the negotiations at a much earlier stage. But because that is banned or prohibited for solar projects now in the future, every project developer has to wait until the final stage to enter into the tender process to get the long-term fixed rate REC purchase agreements executed, and which usually comes at a relatively lower price than the one you could expect for the bilateral private REC agreement. And what's worse is, as you can see in the charts in the lower part of the slide, the REC prices for the spot market and the long-term tender market also both tend to fall. And then the next, or another risk that all developers should be aware of, is the lack of grid availability in certain areas. Grid availability meaning grid connection availability or grid capacity availability in popular areas like Cholanamdo, which is the southern western part that I was just mentioning in the previous slide, where the solar resource is good. And because there is a lot of competition and a rush to develop that area compared to the grid that's actually available in that area is much large. What we're seeing is that people, even though they're able to develop the projects, they're not able to connect to the grid and sell the electricity that's being generated. According to the media, only 47% of the grid connection requests for projects below 1 megawatts were granted. Although in Korea, under the current regulations, projects below 1 megawatt are supposed to, or even 10 megawatts are supposed to be granted unlimited access. And because of this, KEPCO does have plans to reinforce and upgrade the grid in this area by building more lines and substations. This will require a fair amount of time for KEPCO to actually devise the plan and implement it in this area, which we expect will take around 2 to 3 years. Also, another risk that we should be aware of is that the local land development bylaws differ from jurisdiction to jurisdiction. Especially these types of bylaws would usually have provisions on the separation distance, the mandatory separation distance. that the projects should maintain from the local villages or the local residents, and the restrictions on the development of certain categories of land. For example, in certain areas, salt farms are actually allowed to be converted into solar farms, whereas in other areas that's forbidden. Also, in certain areas, only a distance of 500 meters are required to be in place between the project site and the villages or the residential places, whereas in certain areas that distance could extend to 2 kilometers. These types of rules can play a critical role in the development, and if this is ignored or if this isn't given due consideration, this may end up ultimately delaying or even stopping the project. And then the final challenge would be the risk of uncertainty around community consent. As developers, I think we should all be pretty much aware of the risks and the dangers, the perils that community consent can deliver. If we break down the types of community consents into three categories, I think community consent can be categorized into community consent during development, and then community consent during construction, and then that during operation. The problem that we see and that we're facing while actually conducting the development in Korea is that only the scope of community consent during operation is actually clarified under the law, and the amount of compensation that goes with it. So the community consent during development is not clearly defined anywhere. And because this constitutes a factor or an element that's to be considered during the development permit prosecution, its scope is actually in practice left to the discretion of the permitting authorities. And as a result, the scope and the amount of compensation is pretty much uncertain until we actually start talking with those authorities, and they're pretty much heavily dependent on the will of those authorities. So given all the different types of challenges that I've just mentioned, of course, the specific and the detailed strategies or the means to overcome these types of challenges would depend pretty much on the specific project and the specific developer. But I would like to suggest some ideas or some points that one could consider or think about when devising these strategies. The first would be, because of the low and uncertain REC prices, the low returns of these projects, of the solar projects in particular, needs to be compensated somehow. And the most viable means that we see in the market is managing the capex and generating additional incomes through ESS. Fortunately, currently we're seeing a fall in the overall capex price, and the prices, we believe, will be further adjustable if the developers were able to cooperate with reliable EPC partners, either local or international. For example, Vina Energy has solid relationships with key major EPC players worldwide, including Korean companies like Doosan, and we do actually have plans to closely work with them in managing the capex to render the projects viable. And also we see this has become a practice in the market to some extent, but we see many solar developers actively considering attaching the ESS to the project because of the high REC multipliers, or the high REC weight factors, as the gentleman Lian Ko put it, which is I believe right now 4.0, which is granted to the power stored in the ESS. So developers should actually start actively thinking about using or attaching the ESS to compensate for the losses generated by the low REC. And thanks to the new clarification, thanks to the new regulations that are put in place to shed more light, to shed more clarity on the battery installment, we hope and we believe that the battery market will come back pretty soon. Also, because land aggregation, community consent, and permitting work all require local expertise, local presence, we believe that partnering with the right local partners is critical in completing the project, in successfully completing the project. If we go to the rural areas where the projects are taking place, we still see some negative reaction from the local residents against foreigners and renewable developers. So having a trustworthy local partner is important in bridging that gap between the locals and the developers. However, also because we see a lot of questionable partner candidates in the market who may have malicious intents, or who would implement or use inappropriate means to conduct their work. To mitigate any risk coming from those types of local partners, the developers would be required to thoroughly check and assess the partner's trustworthiness and credentials. Another point I'd like to make is that developers must also actively communicate and engage with local communities from the very early stage of development. As we've seen in the previous slides, community consent is a key factor to any development, and any apparent or evident opposition, such as having a placard in place, may result and will probably result in the delay or even the abortion or termination of the project. So to overcome this, developers may consider working with the local village associations and involving those local people into the project, either as shareholders or stakeholders, and in a way turning that project into a local community project. Under the current law, an additional 0.1 multiplier or weight factor is granted to projects that allow for more than 10% of the equity to be held by local residents, 0.2 for those having over 20%. So developers should really start actively looking into this. Also, this is pretty obvious, but also developers should consider deploying serious CSR programs in the area. And Vina Energy has a series, to give an example, Vina Energy has a series of robust CSR programs being deployed in the project regions, and we plan to continue this with our projects in Korea. And finally, to summarize and to wrap up the points that I've been laying forth, developers must actively conduct comprehensive pre-studies or pre-feasibility studies on the overall project feasibility, especially studies on the local bylaws, the grid availability of the target area, the community consent, and the projection of the REC and the capex price before making any significant investment decisions. For example, like purchasing or leasing land and having to pay that huge amount of initial down payment. Although no developer can really be expected to spot all the risks and obstacles beforehand, a prudent approach may significantly or materially mitigate the potential risks, whereas a carefree approach may result in the opposite. Now, that is the end of my presentation. I hope that the strategies or the ideas that I've put down in my slides may be helpful for any potential developers that are actively seeking to develop solar projects in Korea, or those who plan to enter into the Korean market in the future. Thank you.
Thank you, Mr. Steven. Yes, I think it is really meaningful, especially for the foreign developers and to know the South Korea solar market. So
Thank you.
from the view, yes, developer is really excellent. And as well, we have some questions collected from our previous registered attendees, and you can see the questions on my slides. So due to the timing control, I would recommend that we you to answer the third question, and it is more related to the energy storage. So what do you think the future of ESS, integrated solar plant development, look like, and how about the safety issue?
Well, I believe I've touched or covered part of this in my slides or during my presentation. And as I mentioned, because of the recent fall in the REC prices, I believe ESS is now a vital and essential, an integral element to the overall profitability of solar projects. Without the ESS, these projects are now almost non-feasible. And thanks to the enactment of the new rules on the ESS installation, operation, and management, we're hoping that we'll find more stability in the ESS market and in the overall system, which we all know has cooled down or has become dormant last year because of the numerous fire incidents. But despite all these different safety requirements that have been put into place by the new regulations, I think we still, for developers, we also still have to see if the safety rules do truly prove to be of help, or truly play a role in mitigating the fire incidents, because many of these new regulations were actually in the previous two guidelines that were issued by the government. And despite these two guidelines that were issued and being implemented, we've actually had a chance to see, or we've actually seen a fire incident just 2 months ago. And although I believe that incident is still under investigation, that kind of gives us a message that the safety issues, that the safety requirements or measures themselves might not be entirely fireproof. And this might be in the future another issue that's raised by the insurance, especially the insurance or the financial providers, because if this isn't covered by either the insurance providers or the financial providers or even the EPC providers, this ends up as a burden and a huge risk for the developers. So I think there's room to be still seen.
Yeah.
So,
yes, I also believe so. And so really many thanks for your kind answers. And there is another 6 questions for you to answer in the Q&A box. And you can go through the questions and to answer them according to your ideas. So we will move quickly to our next presenter. And next presenter is Ms. Miho, Head of Japan and Korea Research from Bloomberg New Energy Finance. And Ms. Miho leads the analysis and research on energy industry in Japan and Korea from Bloomberg New Energy Finance. And Ms. Miho leads the analysis and research on energy industry in Japan and Korea. And the team covers topics including the impact of energy market liberalization, new downstream business models, and the future of electrified transport. And so, Ms. Miho, can you please share the screen and begin your presentation?
Thank you, Starry. Let me share my screen.
Okay.
Hold on a second. Okay.
Okay.
Can you see?
Yes. Okay.
Great.
To all our presenters today, Mr. Park, Mr. Bars, and Mr. Evan, and Ms. Miho. And thank you for the long-term preparation to give us this wonderful webinar today and your knowledge contribution and always the kind support. Thank you so much. And also a big thank you to our audience for still staying with us until now. And at last, I would like to take this opportunity and say something more about our offline conference, Green Energy Future South Korea 2020. So with an expected wave of COVID-19 happened in late June in South Korea, there have been growing calls that the country should raise its social distancing level. And taken together, the factors of international travel bans and the 14-day quarantine, and the most important one thing, safety and health. So on behalf of the organizing committee, I have to sincerely apologize a lot and announce that Green Energy Future South Korea 2020 will be postponed to a safer date, November the 10th to 11th. Our official announcement will be released on next Monday. And if you have any question or concern about the event postponed, please feel free to contact me. And last of the last, this webinar recording, except for some confidential part, will be shared by email link to you within next week. And thank you again for your participation for our presenters and our audience again. And hope to see you next time. Thank you.